Hi, welcome to Wise Beyond Bitcoin, your home for the crypto neo news, education, and opportunities. My name is Ryan,
My name is Lucas.
and we have something special for you today. But before we jump into that, I wanted to just go through a few of our playlists and what some of the videos we feature. We have a macro outlook playlist where we talk about the Fed and inflation and central banking policy and draw conclusions for financial markets and crypto markets specifically. We have a how to start your crypto journey playlist where we show you how to get a Kepler wallet, how to stake and receive and swap, and all things secret and IBC. We also have a secret NFT playlist where we go through the secret NFT ecosystem and talk about how innovative and unique it is compared to all other NFT blockchains. And we also have a bunch of other videos on validators and DeFi in general. So check those out and take a look. But this is going to be a video where we talk a little bit about economics and finance and some big picture stuff. And we're going to be turning in looking back on themes that were relevant when we first met, right? When we studied economics at the university, we were both fans of Austrian school and the free market ideas surrounding them. And I know Peter Schiff was a name that was on our lips and we were thinking and talking about in those days. So it's great to see a debate coming up. Peter's been in many debates in Bitcoin and blockchain over the last few years, so we're somewhat familiar with his arguments. And Richard Hart is another big name in the crypto space with Pulse and Hex and other projects before that. So we want to take a look at what their debate is and kind of analyze it from our own perspective, right? Because we feel like we have a unique insight into these issues. Go ahead.
And if you think about it, Richard Hart is known for winning and being extremely successful for the last few years with his observations. I don't want to say predictions because it's more just critical thinking and understanding. He spends a lot of time educating and teaching. And Peter Schiff at this point is known for
being wrong
year after year and just really explaining why he's right, even though he's wrong right now, that why he's still right. He just didn't expect his wrongness to last this long. But we did meet while studying economics, and our passion for understanding certain processes and human action in the market led us to Austrian economics, which wasn't taught. It was an outside extracurricular study that we were fortunate to have some professors and other people who were mentors that had experience and understanding to lead us in that direction. So his involvement was very light. There was nothing that we read from him. You know, it was more Menger and Mises, Hayek. We really get into the economics of human action. It's a different epistemology. It's a different scientific method. It's a different approach than the modern economic, what you say, empirical method only. So it adds a dynamic that you don't often receive in university. And what they return to is one of the problems with money, dealing with inflation and printing.
And how it even comes about in the first place, right?
Exactly, how it comes about. So we'll go into that. That's not the point of this, but our dynamic, which we hope to be able to maybe add some value as you listen to this debate and what they have to say. We have a little bit of background and understanding that Austrian economic perspective, and having been around Richard Hart and learned a lot from him and benefited from the projects he's created. We've talked about HEX since before the big payday. So
well, let's go back and start with some of the things that Peter Schiff's been wrong about, because I think there's a common thread here. You know, might not be obvious, but there is a thread linking some of his prior prognostications that have been off the mark.
When you say that, when you go into that, can you also mention that Peter Schiff, in a lot of his positions, actually is quite contrary to any Austrian economic?
That's where I'm going.
Oh, okay.
Yeah, that's exactly where we're going. Yeah.
Your thing, brother.
So what he's known for is right when the 2008 market collapse event happened and we had the bailouts and the QE program was what began, Peter Schiff came out and said, okay, get ready for massive inflation, I mean, he threw out he said double digit inflation was a quote. Yeah, I think you loosely used the word hyperinflation. I think he might have pulled that back, but he definitely predicted severe inflation, even worse than what we're experiencing right now at 7%, 7.5%. So, and this was back in an 08, at the very beginning of a market, big, significant deleveraging, correction, recession, event, right? And why I bring this up is, well, he was wrong. That didn't pan out, and it was like a decade until even moderate inflation started to be hitting the numbers. So he was just wrong. Timing was way off, and then the magnitude of what he predicted never came to fruition. He was calling for $2,000 and $3,000 ounce of gold back in 2009, and it never even hit 2,000. It didn't get there. Needless to say. So what makes this so interesting to me is that if you're familiar with Austrian economics, one of the big themes that they always go back to is how complicated and complex the economy is, and how difficult it is to really predict anything with any. You can predict some things, but how difficult it is to make quantitative predictions, right? So here's what the Austrians would say: we can make predictions in terms of the direction of change, all else equal, right? So if you hold all else equal, hit pause in the world, and you print some money up, yeah, you're going to see prices go up, right? That's all else equal. The direction will go up in the price level, right? But what they don't say is they will give a quantitative prediction. This is, if you print X amount of dollars, the price level goes up X%. They won't go there because of how complicated it is, right? And what's the complication? Well, it's how people will react. How will people react, right? If they go out and just immediately spend all their paycheck because they think prices are going to go up, then yeah, they will get that higher rate of inflation as a response. But if people think that the inflation, the new money policy is a temporary thing, then they might not. Or if they think there's going to be bad times and uncertainty ahead, they might start saving even more, right? They might restrict their expenditures, or they might start buying different things, right? So how people respond is uncertain, and it's very much an individual contextual thing based on one of their own ideas and their situation. So it makes drawing these lines between policy and outcomes in a quantitative level really difficult. And that's what caught Peter Schiff. That's where he got caught up, right? He saw all the money being created and thought, okay, that's billions of dollars in new money. That's got to lead to a massive equal amount of inflation on the price level. And it didn't plan out that way. And so that's just an example of him taking an Austrian argument, but not applying it not using the Austrian ideas in their fullest, right? Because part of it is true. Yes, money does create inflation. New money does lead to higher prices, but the other part of it is this epistemological humility about what we know and what we can know about the future, right? And so he didn't really incorporate that future uncertainty part of the Austrian teaching is full as he took the lessons about money and inflation, right? So it was like a partial. You would say it's like a lukewarm. Had one foot in the Austrian ideas, but another foot clearly not, right? And I feel like this is not just in the inflation monetary predictions that he's made. You also see it in his other arguments, and we're going to get into that in a minute. But I just wanted to lay that out there is that he's known for making bad calls, and even his calls don't make sense given the background that he's coming from.
Right. And the background, mainly the connection to that background would be this loosely political through Ron Paul, and then the movement to talk about the problems with the Federal Reserve.
Right, out of the Fed and all that, yeah.
And then therefore Peter Schiff says, well, if you look at gold and how gold cannot be manipulated and controlled as a central bank can do with fiat, gold stands to be a superior form of money. But as we'll explain in the history of money and how it changes and grows, that gold has always had its issues and problems too. And that Peter Schiff pushing this idea that gold is somehow the money that the world demands just because it has some type of uses is maybe short-sighted. And we're going to go into some of his comments about crypto and blockchain in general, and Bitcoin. normally is what he criticizes. That being, before we go into that, let's also talk about Richard Hart real quick and,
Okay.
and his background.
Yeah. Let's do that.
So this is just off the cuff, and not much pulled up, and I'm sure there are many. I would love to opportunity to communicate with him when that time comes direct, because admire a lot about what he's created and done for cryptocurrency and blockchain in general on many levels. And I have a history of a long time ago reaching out to him on Telegram to ask a question, and he answered. And so because of that, I said, I'm going to support him. And it's one of the best decisions I made in crypto. But always make your own decisions, do your own research, and support those things that you think are adding value to the tech and to the space. Richard Hart has a history of being openly wealthy prior to any projects that he's behind or supporting. So when there are people who come and create things and run away and rug pull, often being a problem in this decentralized world, he has been very open and transparent about what he's generated for himself and what he's trying to create, where the value he's trying to create for the world, and what his purpose. So he's got one of the strongest communities I've seen in all of blockchain and crypto. The other one, of course, I would say from my own experience and from that bias perspective, would be secret community based on privacy, which we'll get into that critique later. But HEX, you could say, is he's built and he's got a history of intellectual honesty, and which we really appreciate, because we make mistakes, and that's how you learn in life. Wisdom comes from experience and learning from mistakes often. So if you'd like to learn, then you're going to like to be able to be wrong about stuff.
Yeah. And he was a Bitcoin maximalist, if I remember correctly, right?
That's right. He was a Bitcoin maximalist, and then he saw some issues and problems with it as being some kind of maybe the panopticon-ish problems or other shortcomings. But he saw an opportunity to create something on Ethereum and built one of the most innovative solutions off of Ethereum to bring power back to. And one of the reasons I've talked about it and loved it from the moment I learned about it was we talk about time value of money and delayed gratification. And many people don't understand that that's a real value in life that comes out, whether it's an interest rate or
how it's expressed, right? But it's a natural element of how things work.
And so what HEX is as a crypto type CD is the time value. It's saying if you're going to, it rewards those who delay gratification, and it pays out inflation to savers, which is in theory what people would think, how a banking system works. Think about that. If a banking system was everyone put their money in the bank, and if they put their money in the bank, then however long they locked it up, then they got paid the annual rate. And instead of it going to centralized banks, now it's going directly into the wallets of those who stake. So,
and I'm glad you brought that up, because it's a good segue into this debate and before we get into this is a quote from Peter Schiff, and he's talking, this is his main criticism of Bitcoin and cryptocurrency in general, and what you just said is a direct response to this. So let's get into it. The truth is, the real success of Bitcoin rests on more people buying it. If you own it, you need to get as many of your friends or colleagues to buy it, because that's the only way its price will go up. Bitcoin is not an asset like real estate where you can collect rent. It's not a stock where you can collect a dividend. It's not a bond where you get paid interest. It's not a commodity where you can actually use it for something like oil to generate power. And it's not like gold where you can make jewelry out of it or use it to conduct electricity. Okay, well, what do I see here immediately is that what you just mentioned is that you can take HEX and lock it up in a CD and earn interest. Well, that makes it very close to that bond that he's talking about.
Right.
Now, the other part is that jumps out at me here is that there's no asset that I can think of that has a price that's traded that doesn't require other people buying it for you to make money on it, right? Like, so for example, if I buy a home and I buy it in a city or an area where people are selling their homes not on net, and people aren't moving in to buy those homes at a similar rate, there's more sellers than buyers. Guess what? The price of that home is going to fall. And so it's just like Bitcoin in that way. And then you can go all down the list, right? Bonds, everything. Nothing, there's no asset that doesn't require other people feeling it's valuable for you to be, for you to do good in it, right? There's nothing that is going to make you money that's being sold or not demanded by everybody.
The
right.
point is this whole notion of value, and that's the point. I was laughing because to have a background in economics, whether Austrian or whatever school, to say that the only value comes from other people buying, it's like, well, that's where value, that's what is the diamond water paradox. I mean, what there is no ideal platonic in the either value, objective value of anything. And so
it's contextual.
To say that that more people buying it relies on the success of something that's to be valued as a medium of exchange. It's like, well, of course, the more people that accept something to be used as a medium of exchange. If I can only spend Walmart dollars in Walmart, or I can spend dollars in Walmart or in Target or in the other, or your local farmer's market, actually, if you don't,
right,
whatever. So the point of the matter is and support local. But the idea is that network effects are real, and that's behind the value of
I think it goes into what we were talking about earlier about how he's not taking these Austrian arguments seriously, because the main argument you hear about from Austrians when it comes to money is that there's this real problem with this institution that gets the monopoly over the creation and the maintenance of this thing, right? That there's no competition. These money monopolists are conjuring this phantom money up out of thin air and then loaning it to their buddies, and that redistributes wealth. Might even cause a bubble or a recession, right? If it plays out. And so we know that's like foundational to the Austrian school. And Peter Schiff knows that, as being a supporter of Ron Paul. That was Ron Paul's main thing. So how funny is it for him to mention, to not bring this up, that, hey, Bitcoin is and these cryptocurrencies are an opportunity to have more freedom in what kind of currencies we use. And it's the only way it was going to happen. It wasn't going to happen through gold, right? You weren't going to vote. Ron Paul movement is not going to lead to people, and let's just be realistic here. We're not going to get a groundswell of people to go vote in politicians who are now going to go make gold money, or you can start, where the Fed is now either on a gold standard, or even beyond, better than that would be, a freedom in minting. And anybody who wanted to bring, some bullion could have it minted to a coin now. That's legal tender, right? That's not going to happen. Like, that's not going to happen. And so if you don't want to see the status quo remain, if you're down to get rid of the money monopoly, if that's a value you have, then guess what? This is the only pathway. This digital revolution is the only way. This permissionless, trustless, decentralized revolution in currency and money and in finance is the way it's going to happen. It's not going to happen through voting. It's not going to happen any other way.
And that's a good segue into another point we can talk about, another place of value. To state that Bitcoin or crypto has no value, well, what about, you look at the problems with money, not just from the centralization and the arbitrariness of the decision making sometimes, where instead of a transparent rate of inflation that people can plan around for years and years to come, you talk about not having intermediaries to secure, whereas gold, you have to hire people to store it and protect it and save it. You have to hire people. With this new digital asset, create something that can't be counterfeited. It prevents counterfeit. And still gold. There are people you have to hire to check to make sure that it's not,
Well, to your point, the whole GLD market is counterfeit gold. And Peter Schiff, I'm sure, is familiar with this, but gold is the price action, what determines the marginal pairs, so we go back to economics, that determine the price of gold are not determined in the physical gold market. It's GLD, it's derivatives, it's futures. So even his favorite market, the gold market, is itself a gamified, monopolized, you would almost say debased, because the supply of GLD is so much greater than the actual supply of real metal. So if they were ever to have to live up to make good on those promises and redeem, they couldn't do it. It's the same thing with like the Fed, they could, so the idea is that the GLD market itself has been perverted,
right,
and is not doesn't have the kind of programmatic honesty that Bitcoin or these other coins have.
And there's a real value lost to counterfeit every year. There are agencies out there discovering, I don't know, millions, billions, I don't know how much over time. I have no idea on the metrics, but there is an actual number out there on value lost because of counterfeit and value spent trying to catch counterfeiters. And I mean, just if you look at the overall energy spent in the economy on counterfeit, it's pretty big.
It's significant. Yeah. Sure.
And also security and storage. If you look at banks and warehouse, whether it's warehousing gold or other, it's very significant. So if you have a technology that eliminates counterfeit and eliminates the need for security of third parties, take all that economic value, the price of the labor and the energy. That's the whole
freeze
purpose.
Those resources up.
That's the whole purpose of studying economics. Understand the economics, the opportunity cost of value, and that can. So that's why when some of his claims that he makes, it's like, well, don't you see that this is a value of should this technology solve these, be solutions to these problems?
And there's another element to that touches on right on what you're saying. He's an entrepreneur, right? Peter Schiff, he owns Pacific Capital, Euro Pacific Capital, I believe. He didn't come into this as an academic. He came into this stuff as an entrepreneur.
Right.
Well, when you study on, and he make the next point, is he often says that Bitcoin has no value. Like that's a claim he makes. Well, the nature of entrepreneurship, according to the Austrians, and this is specifically according to Israel Kirzner at NYU, he would make the point that entrepreneurs often see things. The nature of entrepreneurship is to notice something, be alert. He uses the word alertness, but you would be an entrepreneur's alert to profit opportunities that others don't see. Right? There's value in novel combinations of resources that they imagine in their heads as being a pathway to to making something somebody wants, and others just don't see it, and they capture it. So it's almost like walking past a $20 bill on the ground that only you can see. Right? You have the eyes to see, others don't see it. Well, I feel like this is another example of his incomplete fidelity to these Austrian principles, and that's that. Yeah, he's saying he doesn't see the value in it, but he talks about everything in terms of quantities and commodities and physical units of things, like very material terms. It's like he doesn't seem to highlight the importance of people's perspectives, like what's going on between your ears is much more. Like that's what the Austrians talk about, is that the economy is not just sums of material things being, weighed and exchanged. It's actually people, the value is not in the things themselves, the materialism. It's in the people's heads of what they perceive the thing can be used for. Right? A hammer could be used to just hammer a nail, but then somebody else could see it and have some brilliant use that never been thought of, and they use it for that. Right? So I mean, it's the idea is that being caught up on the material level of the quantities, of surfaces, and not considering that, like what's going on in people's heads in their minds, the psychic level of it. I think it's another example of incomplete adherence to what the Austrians talk about, which is just the importance of subjectivity.
And I think what you just described there. So we've talked about no value. You can't hold it. He talks about you can't hold it. It's like, well, I mean, look at the internet. I mean, look at so many things in technology. What is it called in the models and economic models? That constant for technological progress.
Oh, the A term. Yeah.
The idea is that there is a huge and that's the most. That's where you get the most increase on
well, you're right, because all the things we see, the buildings, the implements, the computers, the skyscrapers, the planes, the cars, the chips, the mic, all this stuff it was just recombined. Is all natural elements that people that have been here for thousands of years that we just all of a sudden figure out new ways to recombine and to create novel things with.
Right.
And that shows you that it's in your head that where the value is, not in the physical things themselves. Right.
So to say you can't hold it, therefore it has no value, it's completely ignorant of the problems with centralized money and the value that these decentralized series, so that that's solved. He talks about all speculation, and you just covered that with Kersner, because the idea is that, well, first of all, to say it's all speculation is, how where do you come up with that metric? Like,
what's not? Show me something that doesn't fit that. Right.
Right. It's tautological. And the idea is that what element of it has actual utility and what element of it is speculating on potential
future utility.
Right. There's that. What do you mean by speculation? And Ponzi scheme, network effects, we cover that, because that just comes up over and over and over again. You hear different people come up and talk about something being something as a Ponzi scheme because other people have to buy it to go up. It's like, that's not the definition of a Ponzi scheme. You're just describing network effects. A Ponzi scheme is some investment model where people give you money. You receive funds to give them some kind of return, and the return that you actually are giving them is coming from the money you're getting from other people. That's literally a Ponzi scheme.
There needs to be a promised rate of return. That's an essential part of it.
You're handing over your funds over to somebody else. It's to another party for some promised return. Right. And the idea of just calling network effects a Ponzi scheme is just ignorant. It's just wrong. It's just not right.
Right.
So, and actually Richard Hart does a great job. I'm pretty sure he does a great job in many times of explaining that what a Ponzi scheme is. And that's one of the things he doesn't, his background doesn't come from economics per se. However, the critical thinking and what
he's got that. Yeah.
You see it. So his intuition, many times his explanations are such that it's his joy. So I think it'll be fun to listen. I think they're going to agree on, here's 3 things I think they're going to agree on.
Okay.
I think they're going to agree on bubbles, that we're in a bubble, and we're going to talk about that, right? We're going to talk about that. They're going to agree on NFTs, because if Schiff doesn't think Bitcoin has value, then he'll definitely think
NFTs have no value. Right.
And I think maybe that DeFi itself, crypto DeFi, is overbought, over leveraged, is a carnival market of a bunch of Ponzi schemes that are out there. And I would say that
there's some truth to that.
I would say that there's truth to every one of those. I would say that the NFT market right now is overhyped. I would say that there are a lot of DeFi projects that exist now that, just like the 2017 ICO crisis, I don't think we're at the bottom of a new bull market. I mean, there's definitely some healthy things to expect. And Richard Hart has been calling also. He's someone who's look at markets and has been explaining for quite some, and does a good job at letting people know that he's been explaining it, that we're still in a correction to the market, not to expect some kind of like run to a
right.
So he's been very accurate with that, so that we're in a bubble. But look, what I want to talk about with the bubble is that, let's get into bubbles. And yes, is the crypto market in a bubble? Sure. But are markets in general in a bubble? And aren't we, in many ways, because of how the monetary system runs, in a constant, ever inflating bubble of sorts in many ways? And what determines whether a bubble is, market driven, based on the speculation of providing resource, utility, and value, or driven by easy access to free money and cheap credit through subsidies and sponsors? There is a difference between what is fueling,
well, that's fair, because not all bubbles are caused by the same things, right?
Right.
And I guess, and I feel like one of the problems with people with the discussion of bubbles is that often we think of the economy at large in this world where we are always having lower interest rates and more money being printed and prices of everything going up. It's easy to just lapse into the more lazy kind of perspective of saying the whole economy is a bubble. And we've talked a little bit about this before we started the video, but there's a degree to which that's true, sure, because prices are going up on everything, and it is a function of the loss of the value of the dollar. But I feel like it's one of those tautological statements that doesn't really add anything, because the real the real interesting question is well, what's the sector that's about to come down? Because if you look at the last 20, 30 years, yeah, you could say we've been in an everything bubble, but look at it. Markets are still at near all-time highs. The Dow and the S&P are near all-time highs. If we've been in a bubble for the last 20 years, I mean, when we're in it right now, like, what does that really mean? What does that at the end of the day really mean? Does that just mean that the price level has gone up across the board? And if that's this case, are we now saying that inflation is the same as a bubble? And I don't know if that's accurate. I feel like bubbles, to be more accurate, to really drill down on it, I think it'd be better to go in the direction you were talking about. Like, what's the mechanics that are leading this one asset class or this industry to have greater demand? And when you can trace it out that way, and not just looking at the overall price level, but when you're looking at a specific asset and how this new money or this credit is channeled to it, whether you're talking about student loans, mortgages, or whatever, Fannie and Freddie, and the buybacks that the government makes possible of those mortgages. Like, when you're talking about those issues, now you're able to see specific industries, right? And now you can take a closer look. Okay, what is driving this price going up?
Or corn and ethanol. Look
right.
at how much land is dedicated to farming corn just to make ethanol, just because there's a huge amount. Yeah. So the idea is that or Tesla, for that matter, Elon Musk would not.
And the subsidies,
without subsidies, there would be no Tesla, SpaceX, and all this stuff. So the idea is that look how much subsidies, that whole sector would be a bubble. You could say that the whole industry there is nothing but an inflated bubble that's being supported.
Yeah.
Right.
But then the next question is, and this is, I think, where it gets interesting, is how long can that last? And the answer, I believe, is much longer than what is intimated, or what's implied by the use of the term bubble. Because at least for me, when I hear bubble, I think inflate, pop. Mm-hmm. And that pop part is important. It's not, you can't just leave that off.
And I think it's also the mechanics, like we were talking about. So sure. if it's a market driven bubble where, oh, look, oil was discovered and how it can be used, or something else was discovered. So we're going to
technology, right?
Telephone cable or whatever it is.
Yeah.
We call it a bubble just because prices are rising really fast and there's a lot of excitement and over trying to resources in this new sector.
It's not really fair.
It's not really fair. Now, when you say that, well, we're pumping and redirecting resources through this centralized channel in order to create this industry, like, you look at Tesla, or you look at corn, that you could say, if we take away these mechanisms,
it'd go away.
If those mechanisms were to go away, then the industries were to go away. So that would be more of
a bubble.
But
then the question is how likely are those mechanisms to go away? And my thinking is they generally don't. They tend to stick. Like, what's the most permanent thing is a temporary government program, right? That's the old saying. And so, I feel like that instead of thinking of these things as bubbles, I'd say they're almost like fascism. Permanent redistribution of wealth.
It's not, I would just say it's more flippant, because you could have a new party come in that just changes the amount or it stops it. And so therefore
it can't happen
when it's market driven. If it's like, well, we just like, cereal, or we just like,
right.
People are going to continue growing pineapples. People are going to continue. It's more,
but when the policy is the reason.
Right.
Yeah.
So I think that's more the bubble. And when you look at HEX, or you look at Bitcoin and crypto, I would say that that's less bubble-ish from a mechanics perspective, because many of the investment that's coming in, whether it's through potential value, it's through a recognition of
it's more organic.
It's more organic, right?
It's not something that's being steered from above.
So the bubble thing, they'll agree on, and there's some truth to that. What about NFTs? So what do you think on NFTs? Do you think we cover?
Well, I think the bubbles. I think that's good. The NFT thing, my hunch is probably that Peter Schiff is going to not be a fan of NFTs, right? Because of his take on Bitcoin. But I feel like it's going to be another example of him not taking his argument to its logical conclusions, because it's the NFT iteration of crypto is an example of being able to do something with this token. You can use it for identification. You can have it, privacy and medical records. It could be it could be your deed to your home. It could be, it has actual use cases. So my hunch is he's going to be against it because he's reflexively not a fan of these digital ideas. But I believe that his argument would actually, if you took it to its logical conclusion, would force him to being a fan of it, as at least as an improvement over Bitcoin.
And now I've heard Richard Hart say he's openly not a fan of NFTs. They're all, overpriced JPEGs, what have you. However, I've also heard him, I think, say that he could see a potential use case, or we've been talking for a while about NFTs that actually have utility or are tied to some type of digital asset bond of a sort. And, we've covered recently a really innovative NFT on Secret Network, Clandestina, and there's another one called Midnight Teddy Club coming out, but these are, and there are more. We got a whole bunch of secret NFTs, not to plug but the concept is that you have an NFT that has a reward that comes, a reward distribution because of a utility that it's bringing by proof of stake, securing a network, that delayed gratification type thing of. So providing a service and a decentralization through an NFT as a fractionalized ownership, like a share, right? Where you have dividends. If you were to try to communicate that to the traditional linguistic, that jargon.
Yep.
I would say that Peter Schiff can see value in NFTs before seeing value in Bitcoin. Maybe he can see, if he can understand that decentralized security prevents hacks on Experian or medical records and Canada, or these the problems with centralized. The whole purpose is centralized servers they're fragile and they're a point of failure, regardless of whatever your political or religious or whatever your beliefs. It has nothing to do. It's like, as a technology, it's just more efficient. We're moving towards more efficient ways of storing information. So in sending it and transacting and updating ledgers. So, but that now, so on the NFTs, that there is a bubble in NFTs, even though there's value, a lot of value. Make sense?
Yeah, I think so.
And so it's like everyone's jumping on the bandwagon of like, oh, this is the first kind of NFT. This is the first new car, but really, are they all the first? Like, are all the NFTs that are out there right now on Ethereum or on Harmony One or on Fan, are they all innovative and the first of their kind? I think that when the market's correct and come down, I think that many NFTs are going to plummet in value they are JPEGs that are overly hyped, jumping on this idea of being the first. And I wouldn't be surprised if even some of the big, powerful communities have a correction in their valuations. Although some may, kind of hold strong, but there's definitely, I would say, a bubble and people taking advantage of this new NFT buzzword, NFT.
Yes.
So, I mean, I know that I've experimented always. I love to make mistakes. So I have partaken in an NFT game that was a straight rug pull. It was supposed to be a play to earn, and to see how those work, and got to see how they
play to burn.
Play to burn. So this and that. NFTs can will be used for gaming, IDs. So they're decentralized ledger technology has value, and there are so many things in the market right now that are secured through centralized technologies that could be moved on to decentralized ledgers, whether it's, titles, identifications, go down the list. Tickets.
And it's really surprising that you have to like make that argument to somebody, to Peter Schiff in this case, who's supposed to see the merit in decentralization and in competition. It's funny that you have to, and it's I don't know. I don't know. I tend to think, part of me wonders, is this a real blind spot, or is this more about trying to convince your friends and colleagues to buy the thing that you bought. In the case we're talking about gold here, right? You know, so that not to be a personal attack on Schiff, but I just wonder
there's no personal attacks on anybody on
if
there.
that's part of what's happening here.
Yeah, we're just talking about ideas, and we're welcome to talk to either Peter Schiff and or Richard Hart.
For sure.
Just talk about markets and life and perspectives, because we're all
That'd be
learning
great.
that together. We would enjoy it and agree with a lot of their perspectives. We're talking about what we agree and foresee, and we look forward to hearing what comes of this as more people can come together and learn more. DeFi, I would agree, is overhyped and overdone right now. But it's an early Wild West of experimentation. So it's great to have copies and forks in a space where you can compare those to other projects that are innovating and becoming more dynamic. It's this, we've talked about it before. It's important to allow for for innovation.
Yeah.
Right.
Dynamic creative destruction.
Critique.
That's what it's all about.
What about a critique? So for HEX, I would like to put out 2 critiques. One would be the originator address critique, which, you know, I don't. The critique is that the way the tokenomics work, that a portion of all penalties and there's an address that receives a large distribution that will in perpetuity receive a large distribution. And the idea is whoever the mystery man or group behind this is, it will have a lot of control over the market of that, having access to that much.
They're a whale.
The currency, they're a whale, so to speak. So the idea is that as long as it's a benevolent ruler or a benevolent king, life is good. And so my critique would be, the idea is that one day this will move into some kind of like permanently transparent open source mechanism where it always, you know, gets distributed to something, so that, or is it
a burn?
Or is it something where I can't, you know, no one can know, or a burn, even better, just like, you
burn
know,
the keys or whatever.
Right. So is there some type of, you know, idea for that, or is it just know that
trust us,
trust me, and whoever the us is? And it's like, well, I mean, you've done a great job for so far. And, you know, that would be that. And the other one would be saying that HEX solves a lot of issues and is decentralized and is a great example of what can be done with blockchain and to automate something and time value of money. So it's a great representation of like an Austrian style of what can be done in order to create an alternative model, especially when you look at, I don't remember the exact 3.69 or 3 point or something like that, but the idea is that the inflation rate, what was Milton Friedman's
3%.
3%. So you know, the annual inflation rate is really moderate when you think about it. Now it can change based on how many people are staking, and they can receive one share. But okay, so the other critique would be that, and we talk about this in our channel, we'll continue. It'd be great to talk to Richard Hart if he would be interested in this, because I would love to see the success of what he's building with PulseX and Pulse Chain to solve the problems with Ethereum and gas fees and congestion. So he's been innovating for so long, creating these projects to really change people's lives and create solutions. But as you know, and we're going to do a whole video, this is a teaser into monetary history, money, you know, the uses of money. People talk about the trilemma. Well, medium of exchange, unit of account, store of value. We talk about those old concepts that economics 101. And if we are looking at blockchain or digital assets or cryptocurrency as a replacement or an alternative, then we really need to look at the whole picture and not be, you know, a bit bedazzled by this shiny new great achievement, and recognize that, well, it's still early and young and the house needs a roof. So let's talk about privacy.
What the roof looks like. You
know, and how even HEX, whether it's PulseX, another EVM, it would be great to see a move to have an SP-HEX or a bridge to a layer one in the ecosystem that still maintains decentralization and allows for people to have those wallets and build those applications and enterprise solutions. Because even enterprise solutions, they're not going to want to
public
send messages and have everything on a public ledger where anyone can look at. That's just kind of weird. It's like, this is a great testing ground. Now take it off the testing ground and move it over here and help build out this layer that
where it's practical. Yeah. And I think what you're saying makes sense by drawing back on the monetary history, because if you think about it, gold and even the fiat money, the dollar system, they all had privacy at their core, right? You could take a gold coin or gold bar and put it in your pocket and walk down to your neighbors and make an exchange, and nobody would know, that trade happened. And the same thing with physical paper money,
which is not a bad thing.
No, this is a good thing.
It's not. It's bad or good. It's a
property.
It's a property, which is to be respected. That if you just exchange something, if you say, hey, something in the woods, I whisper this poem to you privately, that the whole world's like, well, we all are allowed to see what is that you whisper. It's like there's always been an element of
privacy,
choosing who they wish to share certain of themselves and energy with. So to now just move and say, this is a great solution now that we can all look at everything. It's like, whoa, what?
It's like not every innovation in the blockchain has been a positive. Right?
Slow down. It's like, it's like, have you looked at a Block Explorer yet? They're like, what's a Block Explorer? It's like, have you seen the price of Bitcoin? It's like, yeah, okay, slow down, Turbo.
And the idea is that that crypto has innovated and improved on so much of what money was prior to, but that doesn't mean that there's not something about that old system that has value, right? And there's this one level of it, this one layer, this privacy layer that was embedded in paper money and in gold coins that we've lost, and we need to at least recognize that and see if maybe there's something of value. And I think Secret Network is that next step, right? Of seeing the value in crypto and in public blockchains, and in the trustless, way that they are able to decentralize a ledger and keep it honest. But there's also this need for privacy as well. And I think that's the compromise. That's the that's the meeting in the middle of where the true will be found, right?
And that's really what it comes down to. Surely there are projects and technologies that we're unaware of, but when it comes to cornering and understanding and having worked on this for a while, Secret Network, the team behind it, they are not fly by night, and they've been building and recognizing this issue and creating a solution. It's connected to a larger ecosystem that is a major part of blockchain decentralization in the first place. You look at Cosmos, Tendermint, Polkadot, a lot of these protocols are built with similar language, and Secret Network being interoperable with that and offering a decentralized privacy solution. But like you said, we're early, we're still emerging. There are maybe other solutions out there that are going to add to the space, because when you talk about scalability, when you talk about, can the whole world even use Bitcoin right now? No, that would be slow and expensive. Can the whole world even use HEX on Ethereum right now? No. Can't even afford to stake or unstake, unless you got thousands of dollars or how much it costs because of the gas fees. And we'll see even with Pulse Chain, how scalable is that? I don't know the answer. I mean, Richard Hart does, but is Pulse Chain that won't need any layers? Is Pulse Chain going to be able to just take billions of people to just stake for? Is that how it works?
That's questionable.
Is it just ready? So the idea is that when cars were invented or airplanes were invented, runways, more airports and highways need to be built. And the infrastructure for this technology is still young. DeFi, stake, miners, we're
still just getting our heads wrapped around it.
Yep. And sharing what we do wrap around, or even if we're just partially wrapped or still unwrapping, wherever we are in that process, we enjoy sharing and learning and growing in this understanding together, because these are exciting times. And there are opportunities over these next coming weeks and months and years and decades that generations have not seen past.
That's right. Yeah, we're in definitely a unique time in terms of monetary institutions and their evolution. So it's exciting. Lots of changes are underway, and yeah, we're going to be involved in keeping up with it and commenting on it. Anything else we want to say on this debate coming up in February 23rd? Oh, actually, that's my daughter's birthday. Oh, so I definitely will not be watching this.
Yeah, I probably will not either, but
we can watch it on 1.5 after the fact.
Oh yeah, okay. So yeah, I got family and certain things come first, but we'll hear what they have to say and look forward to following up on that for sure. If you enjoyed this and this added value to maybe your understanding of what they're talking about, then by all means drop a comment, give us that love and support with a thumbs up, subscribe, notification bell. None of our content is sponsored. We talk about whatever we feel like talking about as we understand it and it comes across us. So if you want to help keep this gray paint on the walls and these desk lamps going, we've got our Peter Schiff, Richard Hartwell Love and address donation below that you can send that support, and we appreciate that. But it's important, if you are new to crypto first, that you take your time and you learn and you participate so that you can ride the wave and enjoy the value of these network effects and the growth that is happening right now in the space.
Yep, well said. Well, continue to like, subscribe, comment, hit the notification bell. We'll be making more videos along these lines and keeping you abreast of all things crypto. So until the next time, adios.
Have a beautiful day. Namaste, y'all.